Every morning. Long before the opening bell rings on Wall Street. Before the trading floors come alive. Before the first cup of coffee is poured in thousands of office buildings. Millions of Americans begin another day with the same goal: to build a better life. They work hard. They earn promotions. They chase better opportunities. Some spend years studying. Others spend decades mastering a trade. Many do everything they were told would lead to success. And yet, for millions, financial freedom never arrives. At the same time, another group of people quietly builds fortunes that seem almost impossible to understand. Not because they work 20 times harder. Not because they never make mistakes. So what separates them? Luck? Talent? Timing? Or something else entirely? Most of us grow up believing money follows a simple path. Work. Earn. Spend. Repeat. And for a while, it feels like progress. The salary gets bigger. The apartment becomes a house. The car becomes newer. Life looks more successful from the outside. But beneath the surface, something very different is happening. Meet David. At 28, he's everything people admire. A six-figure salary. A beautiful home. A luxury car. Every promotion becomes another reward. Another upgrade. Another symbol that life is moving forward. Now meet Sarah. She earns less. She drives an older car. She still lives below her means. Most people would assume David is winning. Most people would be wrong. Fast forward 20 years. David earned more. Much more. But every raise was followed by a bigger mortgage. A more expensive vacation. A newer car. A lifestyle that quietly expanded to consume almost everything he made. Sarah followed a different path. Every raise bought something she couldn't wear. Something she couldn't drive. Something that quietly kept working long after she went to sleep. Ownership. This is the first hidden rule of money. And once you understand it, you'll never look at wealth the same way again. For most people, money is something they earn. For the wealthy, money is often something they own. That difference may sound small, but it changes everything. Because income can stop the moment you stop working. Ownership can continue creating value long after you've finished the work. Think about the products you use every day. The phone in your pocket. The coffee you buy every morning. The supermarket where you shop each week. Millions of people spend money with businesses. Far fewer own a piece of those businesses. Over long periods, ownership has often been one of the primary ways wealth has been created. Remember David and Sarah? When David received a raise, he celebrated by upgrading his lifestyle. A newer car. A larger payment. A more expensive routine. Sarah celebrated differently. She increased the amount automatically invested every month. No one noticed. No one congratulated her. But year after year, those quiet decisions began to compound. The irony is that wealth rarely announces itself. Debt often looks impressive. Wealth often looks ordinary. Many of the people who appear rich are financing a lifestyle. Many who quietly build wealth don't look wealthy at all. That's one of the reasons it's so easy to misunderstand what real wealth looks like. Researchers who studied thousands of American millionaires found a pattern that surprised many people. A large number did not live in mansions. Many did not drive luxury cars. They built wealth gradually. They lived below their means. They invested consistently. And they allowed time to do what no shortcut ever could: multiply small decisions into extraordinary outcomes. Ownership isn't about becoming rich overnight. It's about changing the direction of your financial life. Every dollar you spend disappears. Every dollar invested has the potential to keep working. Not every investment succeeds. Markets rise and fall. Businesses fail. Risk is real. But history has consistently shown that patient ownership of productive assets has been one of the most reliable ways to build long-term wealth. And that brings us to the second hidden rule. The one that quietly determines whether wealth accelerates or slowly slips away. Lifestyle. If ownership is one of the hidden rules of wealth, then lifestyle inflation is one of its greatest enemies. It's a trap so common. Most people never realize they've fallen into it. Because it doesn't feel like losing money. It feels like success. When David receives another promotion, his life immediately begins to expand. A bigger home. A newer car. A more expensive neighborhood. None of these decisions seem unreasonable. After all, he's earning more than ever before. But every upgrade quietly creates something else. A higher monthly obligation. The strange thing about lifestyle inflation is that it rarely feels dangerous. Each purchase seems affordable. Each payment seems manageable. But over time, your future income becomes committed before you even earn it. Freedom slowly disappears. Not through one bad decision, but through hundreds of comfortable ones. Sarah receives raises too. She enjoys life. She travels. She celebrates milestones. But she follows one personal rule. Before increasing her lifestyle, she increases her ownership. Every raise first buys another piece of her future. Only then does she spend. It's a small habit. But over decades, small habits become enormous differences. At first, their financial lives look almost identical. Both earn more. Both work hard. Both pay taxes. Both build careers. But one graph tells a different story. David's income grows. So does his spending. Sarah's income grows. But her ownership grows even faster. The difference isn't income. It's direction. Then, something happens that no one expected. The financial crisis of 2008. Markets fall. Home prices decline. Fear spreads everywhere. For many families, it feels like the end. But moments like these reveal something important. Your financial habits matter most. When life becomes unpredictable, David reacts emotionally. He stops investing. He waits for things to feel safe again. Sarah feels the same fear. But she follows a plan instead of her emotions. She keeps investing. Month after month. Even when every headline says not to. History shows that many long-term investors who stayed invested through downturns benefited from the eventual recovery, but there are no guarantees, and every market cycle is different. The point isn't predicting the future. It's having a strategy before fear arrives. Years later, the market recovers. David regrets the decisions he made in panic. Sarah isn't celebrating. She simply kept following the same quiet process she'd been using for years. And that's when the biggest lesson begins to emerge. Building wealth isn't usually about making one brilliant decision. It's about avoiding dozens of small mistakes. And there's one force more powerful than both income and discipline. Time. Most people believe wealth is built through extraordinary moments. A brilliant investment. A lucky break. The perfect business idea. But history tells a different story. Real wealth is usually built the same way a forest grows. Slowly. Quietly. One season at a time. Imagine investing $500 every month. The first year. The progress feels almost invisible. The second year. Still ordinary. 5 years later. It doesn't look life-changing. Many people quit here. Because human beings are wired to expect immediate results. But money doesn't always reward speed. It often rewards patience. Then something remarkable begins to happen. The money you've already earned starts earning money of its own. Those earnings begin producing even more earnings. It's called compound growth. And while it isn't magic, it can feel that way over long periods of time. The longer the process continues, the less your progress depends on new contributions. And the more it depends on time itself. Consider two investors. One begins at 25. The other waits until 35. They invest the same amount every month. They earn the same long-term average return. The only difference is time. And over several decades. That single decade can make an extraordinary difference. Not because one person invested more, but because time had more years to work. For more than a century, the world's strongest businesses have continued solving problems, building products, creating jobs, developing technologies. Markets have experienced crashes, wars, recessions, periods of uncertainty. Yet productive businesses have continued adapting. That's why long-term investing has historically been tied to the growth of innovation itself. Not because every company succeeds, but because economies continue evolving. David watches the market every day. Every headline changes his mood. Every decline feels personal. Sarah checks far less often. She understands something many successful investors eventually learn. The market rewards discipline more consistently than constant activity. Sometimes, the hardest decision is doing nothing. Time doesn't care how much you earn. Time doesn't care where you started. Time simply rewards consistency. And that's the hidden truth. The people who appear to have built wealth overnight usually spent decades becoming invisible to everyone else. Because the greatest fortunes are rarely built in moments of excitement. They're built in years of patience. For years, David believed he was building wealth. His income kept growing. His lifestyle kept growing. His responsibilities kept growing. But somewhere along the way, he confused looking wealthy with becoming wealthy. And those are two very different things. Sarah's life looked ordinary. No one envied her used car. No one admired her investment account. No one applauded her patience. But year after year, she quietly bought something far more valuable than status. She bought options. The option to retire on her terms. The option to help her children. The option to weather difficult times without panic. The option to say no. This story isn't really about David or Sarah. It's about millions of people making small decisions every single day. Because wealth is rarely built by one brilliant investment or one lucky opportunity. It's built through habits, through ownership, through patience, through decisions repeated so often. They become a way of life. The hidden rules were never really secrets. They were simply easy to ignore. Rule 1. Income is not wealth. Rule 2. Ownership creates opportunity. Rule 3. Time is your greatest financial partner. Rule 4. Lifestyle inflation quietly steals your future. Rule 5. Real wealth is built patiently. Long before anyone notices. The world will always reward hard work. But hard work alone doesn't guarantee financial freedom. The people who build lasting wealth understand something deeper. They don't just work for money. They build systems that allow money to work alongside them. Not overnight. Not without setbacks. but steadily. Year after year. The greatest financial advantage isn't being born rich. It isn't finding the perfect investment. And it isn't making one brilliant decision. It's understanding the rules before time reveals them for you. Because once you understand how wealth is truly created, a far more interesting question appears. If the wealthy spend decades building valuable assets, why would they ever sell them? Why do some of the world's richest people choose to borrow billions of dollars instead of cashing out? The answer reveals another hidden rule of wealth. Next episode, we will look into an interesting but intelligent fact, that is, why billionaires borrow instead of selling their assets. Sometimes the richest people in the world don't make money by selling what they own. They make money by never selling it at all.